Olá, pessoal. Tudo bem? And welcome to the Brazil Crypto Report podcast, where we talk to the builders, entrepreneurs, and influencers from across the Brazil crypto ecosystem. I'm your host, Aaron Stanley, and today I'm joined by Rony Szuster from the Mercado Bitcoin research team. We're going to be talking about the upcoming Shanghai and Shapella upgrades to the Ethereum network, which are scheduled to happen April 12th. So this topic is admittedly a little bit outside of the scope of this podcast, as I normally try to focus on news events that are specific to Brazil. But these hard fork upgrades are a pretty big deal for the crypto world. And with Rony here, we have someone really great who can discuss this with authority and to help us kind of demystify what all this means. And just as a quick housekeeping note, in light of some of these ongoing disputes between social media platforms like Twitter versus Substack and everything, I would like to just ask listeners to make sure you're subscribing to the Brazil Crypto Report Substack if you don't already, just to ensure that you're receiving everything in the future. Anyways, with that, Rony, welcome so much to the show. Thanks for joining.
Thank you, Aaron, for inviting me. Thank you guys for listening. Yeah, so let's talk a little bit about Ethereum. Yeah, we have a pretty big community of Ethereum here, Ethereum people here in Brazil. We just had two big and nice conferences, Ethereum Rio and Ethereum Samba. And yeah, let's understand a little bit more about this update, right? So can I start?
Yeah.
Just okay.
Yeah. Well, really quick, why don't you just kind of give like a quick intro, like how you got into crypto, what you do at Mercado Bitcoin.
So I had an interesting path. I used to work. I'm actually a chemical engineer, undergraduate, and then I started working for a project engineering company, a chemical engineering project. And we started as a regular Web2 developer, but then one day, one of my bosses said, "Oh, there's some kind of interesting new technology here called blockchain. Have you ever heard about it?" I said, "No idea what the hell is it, But now we're going to try to sell some research products related to blockchain. So start studying that stuff and see if you see some potential in that thing." And that was the best thing that happened in my life, because I accidentally started getting very deep and interested in blockchain technology. And of course, once you learn about blockchain, you inevitably learn about Bitcoin and Ethereum and all the other incredible projects that we have in the space. So yeah, I started learning and consuming all the materials that I could related to crypto, Bitcoin's white paper, Ethereum's white paper, all the things that were created. This was in 2017. So kind of 6 years ago, not a long time, but started also, of course, investing in crypto because, again, when you know the problems that it solves, you see that it is one of the most important and relevant applications of technology that we have today in the world. And then from that time on, I just went further and further. And then after 2 years working in those projects were for private blockchains companies. So it was a little bit different from crypto, but then I was sure that I wanted to change and go to work by researching crypto. Yeah, that was the thing that I love to do. I used to do all the time by myself just for my personal investments, but then I decided that I wanted to do this for my life as my job. So I met Andre in a lot of conferences from crypto that we started going together. And then when he went to Mercado Bitcoin, he said, "Oh, come with me. Let's make a team to develop research there and to study the market and stuff like that." And I was all in from the first time he said it. And that's how I came to crypto and to Mercado Bitcoin. I'm already 2 years with him, and I love it. And I plan to spending my whole life doing this.
Awesome.
But
awesome.
Yeah, all
enough
right. About me.
Great. Yeah, well, let's dive in, man. That's great. That's super cool. I love how everybody takes like a different path into crypto, right? Some people start off on kind of, the monetary side. Some people start off as just, kind of the libertarian freedom side. Some people start off as just like they're just computer nerd type people that see something interesting. You kind of come from like an engineering perspective, doing something totally different. So it's really cool how there's just like everybody has like a completely different path into the world of crypto, which it's always interesting to ask people that question of how did you get into the industry, because you never hear the same answer twice, right? So let's dive in here. So at a high level, why don't you give us a little bit of context on just what these upgrades are? We have two of them. There's Shapella, there's Shanghai. What do these enable, and what's some of the history that got us to this point of, why are these things significant, basically?
Perfect. So let's just give a step back and start with the merge that was 15 September last year, right? Everybody saw it. It was one of the biggest accomplishments from the Ethereum network and the developers. Just a small recap for those who are not familiar with it. The merge was actually the change from the validation structure in Ethereum. We used to have proof of work in Ethereum, the same process that Bitcoin and Litecoin has nowadays. And then the developers decided that it would be better to change to proof of stake. So basically, the merge was this big update in which we created some new chains, which is one of them is the Bitcoin chain, right? I will be a little bit technical just for the people to understand, but I think this is still a high level recap. So the Bitcoin chain is the main actor right now in the Shanghai fork, and I'll explain how this works, right? So for the proof of stake to happen, for the merge to happen, we needed to separate the responsibilities in the Ethereum chain, right? Some people think the Ethereum chain is just one thing, but as you said before, it's actually two big chains which communicate with each other, the execution layer and the consensus layer. I know it's a little bit technical, but you can just think that it's like a father and a mother. Both live in the same house, both work together, both communicate, but they have different tasks and they need to do different stuff in order for the whole house or the whole blockchain to work correctly. So the thing is, the Ethereum developers have like a passion of giving strange names to things. So they gave one name to the update in the execution layer and one name to the update on the consensus layer. That's why we have this Shanghai and Shapella fork. So that's just a naming convention. So the changes in the execution layer are grouped in the Shanghai fork, and the change in the consensus layer are grouped in the Shapella fork. But of course, we don't care exactly about one of the changes in one or another. So we just call the whole fork as Shapella fork, which is a little bit Shanghai, a little bit Shapella. So from now on, I will call it just Shapella fork, just to refer to both changes. But be known that if you want to refer to some specific change in execution layer, you can use Shanghai and Shapella, etc. But okay,
Could you describe really quick what the difference between the execution and consensus layer? Like, what are the task differentiations here?
Okay, so before the merge, actually before the Bitcoin chain was created in December 2020, everything was done by the actual execution layer. So validating transactions, getting a consensus from all the validators from the network, running smart contracts, sending messages to all the participants, which you call gossip. All of this was managed by the execution layer. So when we had the merge, the developers decided that it would be nice to separate those responsibilities. This is actually a good pattern from software development, right? Because now when you need to do some kind of repair kind of in the blockchains, you don't need to do it in the whole that do all the stuff at the same time. You can do changes in the execution layer and don't do it in a consensus layer and vice versa. So it's much better for you when you're writing code and you're maintaining code to do it separately, right? So that was one of the main objectives of the merge also, right? The merge was not only to change from proof of work, proof of stake, but also to make it easier for the developers to leverage new updates such as Shapella and Denkun, which we're going to have at the end of the year. But that was the start of the merge, right? We need to finish the merge. And what does I mean by that? I mean, when you created a Bitcoin chain, this consensus layer in December 2020, you allowed for people to deposit their ETH in the contract, right? But you couldn't withdraw it. Like you were only allowed to take your ETH and put a validator there, and which are 32 ethers right now, and you don't have any option to take it out. I mean, we'll talk about the liquid staking derivatives, but for now, you can think that you wouldn't be able to take your Ether out. And this started in December 2020 when the Bitcoin chain was launched, but it continued up to now, right? So the merge didn't enable the withdrawals. So what we need now after the merge is exactly that, some new fork that will enable the withdrawals. And this is exactly where Shapella comes, right? So Shapella actually has 5 EIPs, right? For those who doesn't know, EIP are Ethereum Improvement Proposals. So, but actually one of them is the most important, which in Portuguese I call carro-chefe, which is like the main EIP that we are going to have, which is the EIP exactly that will make possible to take the withdrawals from the Bitcoin chain, right? And this EIP is EIP 4895. I have here in my report, and we're going to talk a lot about it. I would just mention the other EIPs. I won't deep dive into them, but they are mostly optimizations for the chain in general, right? For the EVM, for the opcodes and stuff like that. So we have other 4, which are warm Coinbase, push 0 instructions, limit meter init code, and deprecate self-destruct. Doesn't matter. Don't worry about it. We wrote a report. It's in Portuguese, but for those who are Brazilian or Portuguese can read it. Is explaining everything, so I won't go into detail on those EIPs. But if you want, I can send you the link so that you have the full information. They are mostly minor optimizations for developers, nothing interesting. What really is interesting is, as I said, EIP 4895, because it will, as I said, enable the withdrawals from the mainnet, right? So people that started depositing those ETHs right there in December 2020, almost two and a half years ago, right? Now they will be able to take it out, of course, with the rewards, right? Because when you deposit ETH as a validator, you are randomly chosen by the algorithm from the proof of stake method. And when you validate some transactions, instead of rewarding the miner, which was the case before when you had proof of work, now you reward the validator. And those validators are are earning those rewards since December 2020. And now they will be finally able to have liquidity on those assets, right? So much of the people that started with 32 ETH for each validator, but they also managed to earn lots of ETH as rewards. So this is something interesting when we analyze the quantity of ETH that will be withdrawn and that will be sold, which is, I think, one of the most important consequences of this update, because the investors really want to know exactly what is going to happen with the price, if the price is going to drop, if the price is going to get higher. And we're going to discuss a little bit about that, because I think this is the most relevant point for investors, right?
Yeah, and I think, last time I checked, there was something like 17.5 million ETH staked currently on the Beacon chain, which at today's prices would be something around like $33 billion, which is quite substantial. And I mean, that's larger than the market cap of most other cryptocurrencies out there, right? So I guess the question would be, I remember when I staked my ETH, I think I used Kraken or which subsequently has been sort of shut down by the U.S. government. But I staked on Kraken, and I got this warning notice where it's saying, like, you may never know, you may not ever actually get your ETH back. Like, I acknowledge these risks that I'll get this back at some indefinite point in the future, or maybe never, right? And I guess the question would be, it just seems like $32 billion to be deposited into this contract with no, guarantee. I mean, it's in the roadmap that the withdrawals would be unlocked, but there's no guarantee, right? That just seems like for earning, the average reward on staking would be something like, between like 4 and 5%, if I'm not mistaken. It just feels kind of like a lot of risk for that level of return. Anyway, I'm just kind of curious as to, like, why is this something that people have been so excited about, like, just pouring their ETH into at this point, given that the fact that you don't know if and when you're ever going to get it back. Though we will get it back, but like for the last 2.5 years,
we're not sure.
Right?
Yeah, that's a very good question. Actually, there was some big things that influenced this. The first thing I already mentioned was the liquid staking derivatives. Yeah. So of course your ETH, your real ETH is deposited there and is locked. But there are some very nice protocols and also some exchanges that offers the possibility for you to pay a discount and then get the liquidity from it, in which we call the liquid staking derivatives. So we have, for example, STETH, we have BETH from Binance, we have CBETH from Coinbase. Those are all kind of recipes that you get when you deposit your real ETH for them to make the staking for you. And then those recipes you can use in DeFi, you can use to trade with other people. So this is kind of a way to give you liquidity even if you have your ETH stake. And of course, when the update is complete, you can change this recipe for the real ETH 1-to-1, right? So for now, of course, most of those recipes, they trade with a discount because you're like paying for the liquidity that you get, and they are assuming the risk of the update. So, for example, I think CBETH was like 0.99 ETH, or BETH was also like 0.98 ETH, just because they are accounting for the risks. But something that you mentioned is, why would somebody risk so much money right at the beginning to stake ETH? But the thing is, when you see the curve from the yield, you see that at the beginning, in order to attract much more people, the yield was much, much higher, because we also had much less ETH staked in the Bitcoin chain, right? The more time we come, the more ETH staked we have. So the rewards at the beginning were about like 24% yield in Ether a year, which is, I think, the most incredible thing that I ever saw in my life, because it's a very strong asset in my opinion, and you were gaining like a lot. Of course, as time passed and as more ETHs were deposited, this yield got exponentially smaller, and now we're about 4 to 5%, depending on the day, depending on the number of validators. But you're right, we have about 7.5 million ETHs staked right now, and this was important because in order to do the merge, in order to switch the validation from miners to validators, we need to have a lot of ETH and a lot of validators, because if the validators number fall less than 2/3 of the network, we may have a possibility to have an attack on the network. So it was really important that we waited a long time, and we provided some financial incentives for the validators to come to the Ethereum network in order to have this structure ready before the merge. This was actually one of the things that's why the merge took so long, because we need to have this structure already created in the background. But anyway, then people started to depositing the ETHs on the Bitcoin chain and use these liquid staking derivatives. And this is also one of the big reasons that we don't believe that will be a big price fall in after the ETH are enabled to be withdrawn, because people, traders like day traders, swing traders, people that want to speculate on the ETH price, they already have the option to do so with the liquid staking derivatives, right? So you can go to Lido, stake your ETH, take your STETH, and use it on Aave, and use it on anywhere you want here in finance. So you have liquidity, right? You have a discount, of course, because it's a different product. You have the liquidity. You have to pay for the liquidity that you want to have, but still you can speculate on ETH even with your ETH being staked there on the chain. So I don't believe that much of the traders will be interested in doing so, because they already can, right? So this is one of the big reasons why.
In that sense, we saw a lot of people kind of day trading, trying to swing trade the merge. It really proved to be sort of a buy the rumor, sell the news, or kind of sell the hype type event, right? Where there's a big run up in price, then it kind of dumped right after. So you're not expecting anything like that in this instance, just because you already have these liquid staking derivatives that, if people want to speculate on the price of ETH, they can. Though granted, some of these derivatives haven't been. I mean, it's kind of tricky, just because we've learned with like the grayscale trusts, right? Where like if you don't, without convertibility, it's hard to have parity, right? So the price of these liquid staking derivative tokens will fluctuate, but it does give. I mean, these are some of the largest market cap coins on the market right now. So there's clearly like people have a huge interest in purchasing and using these things. But basically, you're not really expecting any kind of major sort of swing or day trading activity around this event, just for that reason. Is that am I understanding that correctly?
You're totally right. But I also, in this report that we made, I also put some arguments from the other side, just for us to have like a democratic argument, right? So people that defend that we're going to have a big fall in the prices say that will be done because of liquidity. Like, so the market is still very low in prices, so Bitcoin is 28, and it was like before 67. So we're still like, I don't know exactly, but 40-50% drop from the all-time highs, and people need liquidity right now to invest in other assets. So based on this, they would take their ETH reward and sell it for money, for dollars, in order to invest in other stuff. We also have the stock market is going really bad because of the banks crisis, and also the Fed hiking the base taxes. So people will probably, as they say, right, people will probably take all this money from ETH and buy stocks and buy rights and buy stuff like that. So yeah, this is actually a fair argument. I think it is possible that some people will do that, but actually there are two types of withdrawals. Some people don't explain this exactly, so let me do it. You have two options to withdraw, actually. So if you stake, for example, 32 ETHs like in December to 2020, you will have the 32 ETHs that you stake as a validator, right, which you need to have in order to be a validator. But you also have this other part, which are the rewards that you accumulate since you started validating. And so you can withdraw just the rewards, you can withdraw, or you can withdraw just all of them, right? The validator and the rewards. And this is when things get very interesting, because the rewards themselves, they're kind of a big quantity, but they're not as big as the sum of all the validators, right? And so the question is there are actually two questions. Will people just withdraw the rewards, or will they withdraw the validators? And the second one, will people that withdraw those ETHs sell them right away, or will they take these ETHs to run another validator, or using DeFi somewhere, or using any other stuff that NFTs or stuff like that? So I think that's why I believe that we won't have a big price drop, because I think first, liquid staking derivatives already took care of day traders, swing traders, and people that want to speculate. And my argument is that people that are running validators for the Ethereum network are very much aligned with the ethos from the community, and they want to keep validating, right? And that is also a very interesting argument related to that. You said, oh, but ETH staking rewards is about 4 or 5%, which is not very good. If you see, like, I don't know, Cosmos, we have like a 20% APY and stuff like that. But the thing is, when you see the real yield, right, when you take out inflation from the protocol, you see that ETH is one of the best that you can have, right? For example, I'm not sure exactly the values, but let's say Cosmos is giving you 20% APY, but the inflation from the token is like 17% a year. So your actual real yield is just 3%, which is much less than the I don't know, 5% from ETH, right? And the thing is, if some validators, of course, will be shut down. It won't be everybody that will keep their validators. There are already actually some validators which are on the line to be shut down. That's normal, but they're not a big quantity. But when validators come out of the network, the yield for the rest of the validators that remain goes a little bit up. So this is also interesting. So the yields after the Shanghai fork will probably go up. I mean, we may have more validators entering the network, because it will also be more safe to enter it right now after the Shanghai, because you can deposit and withdraw all the time. So some people that wouldn't like to keep their cash blocked for so many times before now may enter the network. But I think the people that will the outflow will be bigger than the inflow at the beginning. So we'll probably have a hike in the yields. Not a lot, of course, maybe from 5 to 5.5 or maybe 6, but still this makes it still the most rewardable. I don't know how to say it exactly, but the real yield from ETH will be one of the greatest in the market. And ETH is also a very used asset, right? You can see from the burning dashboards, we have like thousands and thousands of ETH being burned all the time. And so still one of the most attractive assets. And yeah, I think what will happen is there'll be a mix of something like that. Maybe the price will swing a little bit. Maybe people as soon as they take their rewards, they try to sell to get some liquidity to invest in other stuff. Maybe the price may fall a little bit, but I think that in the long term it should rise, because it makes sense for new people to go validating. It makes sense to people to use more ETH in the network itself, in DeFi and NFTs and metaverse and stuff like that. And yeah, so that's my prediction. I hope I will be right. But next week we're going to check it.
Yeah. No, there's a couple things you said there that are super interesting that I want to just kind of circle back on. I mean, I think the first part you mentioned is that a lot of the people that that were staking initially, putting up the 32 ETH to run a validator, were kind of like early like Ethereum whale type people, right? Like people that were like really diehard believers in the community, and you have to, and 32 ETH is like a pretty significant sum of money, even back in December 2020, back when it was only $500 or whatever. That's still like a pretty significant. It's a reasonable sum of money to invest, right? So a lot of the people that were putting up these, the initial stake were some of these guys who were like really just like Ethereum diehards that weren't necessarily in it, quote unquote, for the money, right? Even though everybody's in it for the money to some extent. But guys like Anthony Sassano, I remember his podcast. He was like so excited about he could stake his ETH finally. He was just like overjoyed, so guys like too. Yeah, the bankless guy. Yeah, so those guys that were just really like, they're just such diehard believers, and they want to like, they just want to make their contribution to growing the network. And it's not aligned. There's no incentive for them to just sort of rug pull the whole network by pulling out their ETH right now, right? And just kind of tanking the whole system. And then the second part you mentioned, which I hadn't ever actually thought about this, but it makes total sense. But your point about the kind of the real adjusted returns on staking, right? Because you look at the ETH, you go to these platforms on on Binance or whatever exchange you're on, and it says like, oh, click here to stake your coins, and it's like ETH, you get 3%. And Cosmos, you get 20%. It's like, oh, well, I should stake with Cosmos because I get 20%. But to your point, those numbers that they're giving you aren't necessarily taking into to account the inflation of the protocol.
Yeah, exactly.
And ETH has, ETH is, as far as I know, it's like a deflationary coin, right?
The only one.
Yeah, post merge, post EIP 1559, it's deflationary. So I think maybe there's a chance that more nodes get spun, or more validator nodes get spun up post Shapella here. Maybe you end up going slightly inflationary, but it would probably be less than 0.5%, 1% at max, right? So I guess maybe the question would be like, how does this sort of enhance this like ETH as ultrasound money narrative? Is this I guess do you even buy into this narrative that it feels more, it feels kind of like just very like sort of clever marketing to me, but I can't disprove it. So, but I would love to, get your thoughts on like, does this Shapella upgrade really enhance that kind of narrative moving forward, as of ETH as like it's really, it's like the only deflationary cryptocurrency at this point of any scale.
Yeah, so I do think it has a lot bit of marketing. I agree with you, but it also has some sense, as exactly what you said. Like Bitcoin, for example, is not deflationary. It's just it just gets less inflationary over time until it hits zero. Ether is actually the only deflationary. At least the only big top 50 cryptocurrencies that we have all the time. But what I like to think is, what does it really mean to be deflationary? It means that the blockchain pays itself. The blockchain users via the burn and structure, they're able to pay the whole operational part of the blockchain. So they created a blockchain that is so useful that people want to use and want to pay so much that they're able to maintain the validators by just using the network, which is something that no other blockchain has achieved, right? Bitcoin, for example, needs to emit coins in order to make the mining viable. So they're not able to do the same thing. They're not able to guarantee that the users are enough to pay for their blockchain. They will be like in 2140 when the Coinbase reward stopped. But for now, they're still inflationary, even though they're also very, very little inflation compared to the other protocols. I think it was like 1.7% a year, which is pretty much acceptable. But anyway, Ethereum, no. Ethereum already has a block space that has so much value that people are. You actually have a net positive value in the blockchain. So I think this is incredible. As I said before, we never saw this before in any other blockchain. It makes even more understandable that Ethereum is the heart of the smart contract world. That you can do everything from DeFi to NFTs to everything that you want in Ethereum. And yeah, I think this makes the narrative from the ultrasound money a little bit stronger. But of course, you may take it with a grain of salt, because we have a lot of problems in, for example, the regulatory area, right? Which is very important for investments in general, right? So the way that SEC and CFTC are going to treat the ETH is very relevant in order to see if it will be effectively used or not. I mean, of course, it is used in the Web3 environment. We're talking about adoption for the whole world. And I want to be able to pay my coffee with it someday. So with Gwei, I hope, because it will be so valuable that you won't be able to use it. But anyway, you understood it. So for that to happen, and for example, something much more interesting, which are institutional players investing in crypto, like in a big way, we need this regulatory side to work together with the Web3 side, and we don't have it right now, at least in the US. And this is very bad.
It's a big problem. It's a big problem. Well, we thought we had it, and then now we don't have it. So it's we sort of reversed course on some of that, exactly. Unfortunately, which is sort of probably a subject for another podcast, I suppose. But yeah, it's definitely an issue. I think in Brazil, the CVM has made some comments, not like directly saying that they don't view ETH as a security, but they've made some comments suggesting that they would not view kind of ETH staking products as a quote unquote security. Mm-hmm. But I mean, maybe let's use this as an opportunity to maybe pivot to just the Brazil market specifically. Maybe we can talk a bit about the regulatory side, but also like just in the last 2.5 years and maybe moving forward, what has the market been like for what's been the demand amongst investors, whether retail or institutions, to get involved in staking ETH as an investment opportunity? And I'm thinking particularly just given the high interest rate environment in Brazil right now, where you basically have to meet like 12-13% returns just to be competitive with just at investing least, in government debt, right? So, what would be the appeal for an investor or an institution to stake ETH where you can earn 4 to 5%, when on paper you're kind of losing 7% against the next best alternative, basically. Anyway, would love to get your thoughts on just how's the Brazil ecosystem been looking at this? Okay,
so first thing is, yeah, right. We have like a very high base. How do you say it? We have a 14.75 base. I forget the name from the
benchmark interest rate, right?
The interest rate. Yeah, exactly.
So it's like the federal funds rate of Brazil, basically. Yeah, it's 14.75.
So this is very high, but this also includes the risk Brazil, what we say, right? So we have a very populist government right now, and we also had actually before, but it was a right wing and now a left wing. So most of the investors are still afraid of investing in Brazil, myself too included, for example, because that's the thing. You have so much instability, right? We have right now arcabouço fiscal, which are lots of changes in the way that taxes are made, and the government wants to tax all other initiatives, for example, dividends from companies. So that's why Brazil needs to have such an interest rate, well, a little bit higher from the world. But the thing is, I think that, as you said, CVM is very much a good regulatory agency here. They're trying to understand crypto. They're trying to do a lot of projects. BC2, the central bank from Brazil, the Federal Reserve from Brazil, also works very closely to the community. They're trying to do lots of projects. We saw some talks in those conferences about some projects. And they do some projects, for example, with Mercado Bitcoin, in order to understand how can we use tokenization, how can we use Ether and other crypto assets in the market. So I think they're very open to it. We already have here in Brazil for a long time the ETFs, the spot ETF from Bitcoin, from Ether, for almost all the combinations that you can imagine. So our regulatory panorama here is much better than in the US and the outside. But I think, yeah, something that you said is the most relevant thing. I mean, the investor here still, they are afraid of Brazilian government, but they still want to invest a lot of their money in the government bonds because it pays a lot. That's what we call rentismo here in Brazil. If you just lend your money to the government, you get like 15%. So it's really hard to go with it. But the thing is, you're also buying a very high risk. That's why you also need to balance between your assets. I see Ethereum with a much lesser risk, even though it's a technology, even though it's evolving all the time. I can see the community that is behind Ethereum. I can see the developers. I track what their updates, and I still think it is a better money than Brazilian reais, in my opinion. But yeah, I mean, this is personal.
The real is not ultrasound money in your view.
The real is definitely not ultrasound money. The dollar is also not. We actually have no ultrasound money, but I mean, we just need a good money, a money that resists inflation in some way, or at least allow a very low inflation rate so that people can keep buying stuff with the same money at least. And yeah, I think maybe Ethereum is like 40-50% ultrasound money, but still not there yet. It needs to prove itself.
Well, I think the other component here is the when we're talking about the opportunity costs of these different types of investments. I mean, there is the appreciation potential of ETH, right? We did see it run up to almost $5,000 in the last bull market. We're sitting at about 40-50% of that sum right now. So even these rewards, even you're earning 5%, assume you're earning 5% on your staked ETH, rewards in the, for the foreseeable future, but the value of those rewards might double triple, quadruple in the next bull market, where the 15% you're earning in reais on government debt, you basically can guarantee that it will be going down, right? Mm-hmm. Because if inflation is, I'm not sure what the official inflation numbers in Brazil are right now, but your real return would basically be something like 7-8% or so. Assuming there's like 7-8% inflation in the country right now, which seems about accurate in my purview, though I haven't looked at the official numbers recently. But so then you're talking about, in real terms, you're actually not talking about that big of a difference, right? You're getting 5% return staking in ETH, and you're getting maybe 7-8% real return by buying government debt. Maybe there's not that. If you just assume some price appreciation later on down the road in the price of ETH, then all of a sudden, okay, maybe this is a pretty compelling investment opportunity. On the Mercado Bitcoin side, I know you guys offer a staked ETH product. I think you guys launched it fairly recently, maybe in the last year or so. Would just love to hear a little bit about what type of demand has there been. I mean, has this been something that folks have been interested in, retail, institutional? Has there been, obviously there's a bit of an education process into teaching people what this actually is, right? It's a little investing in crypto is, scary enough for the average person, but this other kind of, staking your crypto, what does this even mean, right? So we'd love to kind of hear what type of uptake or what type of interest have you seen from the client base or from just other investors just interested in learning more about what this product is.
Oh, perfect. Yeah, so we launched the staking for ETH, I think it was the end of November last year, so a little bit kind of 6 months from now. And we see a big search for this product, right? We did some researches before in the Brazilian market, and we see that people used, for example, Binance and Coinbase because they were able to stake their coins there and also earn some reward. So that was something that we wanted to implement in Mercado Bitcoin, and we're not stopping there. We started with ETH, but we're probably announcing in the next month some some other possibilities to stake other assets like Solana, Cardano. Don't know exactly which ones. Of course, our technical team needs to study how to do it. But the idea is also to have a better user experience for our customer, right? So he will be able to buy ETH, buy Bitcoin, buy anything he wants, and also stake it in our platform. Of course, always in a safe way, which is the most important thing in crypto. Most people just don't care about it, but it's actually one of the most important things. Somebody who has money on the FTX knows exactly what I'm talking about, or in Celsius or in BlockFi. So security is number one priority, and of course we have it in Mercado Bitcoin. And that's why we also takes a little bit more time to develop some products, right? Because we need to do it in the right way, not as FTX did. But yeah, I think we saw some big demand from the retail. We also some institutions want to talk about, but institutions also have other ways to do staking, so a little bit less than the retail. And our focus in the exchange are mostly also retail clients. We have like almost 4 million participants, which is a huge number. And yeah, I think it will grow larger also when we include those new assets available for staking in the future, right? So I think it will be very interesting to see the development. The thing that I'm most afraid is actually the regulatory side, as we said before. Like um, if the US, for the SEC, considers ETH in stake as a security, this won't be good news for us, even though we may believe that CVM and central bank won't do it here, but still it's a risk. We know everything that the US does have a big ripple effect in the world. So let's hope CFTC wins the battle there, and they treat it as a commodity at least. But yeah, I think it is a very good product, and I'm much proud of it. And I do a lot of staking in Mercado Bitcoin too, which is I also use Lido, which I like very much because of the liquid staking possibilities. But yeah, that's it.
So I guess two more questions here. I guess the first would be, we've talked a bit about some of these liquid staking protocols, the Lido and these others. What becomes of these protocols once withdrawals are enabled? Like what's the value proposition for a liquid staking, like a synthetic ETH that's paired to a staked coin, when I could, I mean, well, why the synthetic version when I could just have the real thing, right? Or will there still be a demand for people that they want to stake their ETH, but they also want that synthetic token to be able to go yield farm or do other, airdrop farm or whatever they're going to do? I mean, would it actually be beneficial for these protocols, just given that you have the convertibility now, right? So there you can actually have the full price parity because the assets are actually convertible.
So I think it will be still relevant to have those protocols, because they not just give you the recipe for now, but they also give you the whole infrastructure needed for staking, which is also very complicated. I mean, if you want to run a node at your home, it's not a simple task. Not only you need 32 ETHs, which, as you said before, is a lot of money, but you also need to be sure that you have like internet connection all the time, that you have the updated software version for your client, that you don't have any other issues that you could get slashed and lost and lose all of your staked ETH. So running a validator is not an easy task. That's why we have like such companies doing that, and the exchanges doing that. And that's why I think that Lido, Rocketpool, and Staker and all those protocols will still be relevant even after the Shanghai fork, even after we have the parity from the recipes to the normal ETH, because they abstract you all of the worries that are related to running a node. And of course that has a cost, like a small fee that you need to pay, that they take out of your staking earnings. But it's much easier to do it than to do it alone. It's as I said, it's not only the capital need, but also the technical stuff that is very hard for 99% of the investors. So I think there will be actually even more search for the liquid staking derivatives not because of the derivative itself, but because of the service that they provide.
Oh, interesting. So, I mean, that's an interesting point. I remember back when the Beacon chain was first about to launch. I had this ambition. It was like, I'm going to run like a testnet node in the lead up to the Beacon chain launch. And I think I maybe got like 20 minutes into it. And I was like, yeah, this is way too, I mean, I'm not technical. So like, I was like, I downloaded this. I'm like, okay, yeah, there's no way I'm gonna be able to do that. So I'll just outsource to somebody else. It's fine.
Yeah, exactly.
Right. And then I guess the other question would be, and this may actually be a kind of like a nothing burger question, but sort of dumb question, but does this have any meaningful impact on, all these different kind of like layer 2 ecosystems that we're seeing really coming to fruition right now? We just had like the Arbitrum airdrop, obviously. I mean, it seems like these kind of layer 2 scaling wars are like really heating up. But does this upgrade at the kind of the execution and consensus layer of the Ethereum mainnet have any meaningful impact on layer 2s or these ecosystems?
So no, the short answer is no. I think this update has no relation with the scalability issue, which encompasses all those layer 2s and side chains and stuff like that. But also linking with something that you said before, and the next steps for Ethereum, I think the next update will have a huge impact on scalability and layer 2 and rollups, which is the Cancun fork. Where Cancun is again the name for the execution layer. Deneb is the name for the consensus layer. So you can call it Dencun fork, which is very ugly, but anyway, that's the developers from Ethereum's ideas. But so this fork, which will probably happen in October, November this year. Anyway, we know that it always has some delays, but I think it will still happen this year or maximum in the beginning of next year. So this fork will implement what we call proto-dunk sharding. I won't get into too many technical details here, but it's a way to give the rollups and layer 2s and sidechains some space dedicated to them directly in the Ethereum chain, the regular chain. So it will be much, much cheaper for them to include their transactions and their proofs of transactions in the main chain. So this will have a huge impact in everything that relates to Ethereum. And of course, the rollups themselves will greatly benefit from this update. Their costs of transaction will probably be much, much lower than they are today, which are already still usable. They're not cheap. They're like some cents, maybe $0.50 when they're like very used, but they will drop like 10 times up to 100 times. So it will be really, really, really cheap to use the rollups after this fork, after the fork is successful, of course. And this will solve the biggest problem in Ethereum nowadays, which is scalability, right? We also have other two big problems, which are UX and regulatory issues that we talked before. But we are already addressing them. I mean, we have account abstraction for UX. We have at least some crypto lobby in the US trying to regulate in favor of crypto. And the answer to the scalability issue is exactly this fork, right? The Cancun fork or Deneb fork that you're going to have at the end of the year. Of course, this is just a first step in solving the issue. It's not a complete solution. We need to get to a sharding solution, which will come just years from now. But this is a good start. This is a first step that will probably make rollups much, much, much cheaper and much, much more accessible for all people and for all applications, right? So yeah, I think it's
amazing. And you completely front ran my last question, which was going to be what's next on the Ethereum roadmap. Already covered all of that, so that's great. One other question about on the dank sharding front. And this is maybe a bit of a dumb question. This is an area I paid attention to a lot like 3 years ago, and my knowledge has sort of has fallen a bit since then. But is the dank sharding like a divergence of sorts or a pivot, I guess, from kind of the original ETH2 roadmap? Whereas when I was studying this back about 3 years ago, I remember the plan was to have, we're going to have these 32 shards, right, on the network, and then the beacon chain is basically going to be the almost like the air traffic controller that's communicating between all the different shards, right? And now it seems like essentially these shards have really, the roll up, the roll up centric roadmap has really kind of replaced the shards, at least in the interim. But the sharding will eventually, the sharding has basically been like moved down the roadmap essentially, because the layer 2 sort of roll up functionality it's basically like a better short term, medium term solution. Am I understanding that correctly? And this is the whole idea of the dank sharding, where you're basically you're doing roll ups first, and then you get to the sharding. Am I understanding that correctly?
You understood 100% correct. That's exactly what happened. They realized that sharding is complicated, technically very complicated to implement. Some new blockchains already have it, and they give some very big issues. And we are talking about small blockchains with like 1 billion year protocol, something like that. And Ethereum has like much more money than that. So imagine the mayhem that would be if we tried to implement it and it didn't work. So that's exactly why the devs and the researchers there pivoted in this new solution, which is much more simple. It's not simple, but it's much more simpler than implementing the full sharding from once, and still solves the problem, which is, the goal is to solve the scalability issue. If we solve it using shardings, if we solve it using rollups, doesn't matter. The user just needs to have a chain to use and to guarantee that their transactions are safe. In the rollups, they inherit the security from the mainnet, so they are guaranteed to be safe. The sidechains not, but the rollups they do. So yeah, that's why they decided exactly to pivot the development in focusing on giving the rollups more space, this rollup centric that you mentioned, and then we can do shardings later, because sharding is very complex. As you said, you need to have the Bitcoin chain coordinating 32 or 64 shards at the same time. You may need to deploy, for example, Uniswapping a lot of shards. You may need to change shards. It's not simple. So that's why they opted for that solution. Yeah. But we also, just to complement, we have a big roadmap for Ethereum in the coming years, right? Vitalik just showed us some of his ideas, right? So we have the surge, which would be the eventual implementation of shardings, probably 2025. I don't know, depends a lot of other stuff. We also have the purge, which will be an update that will focus on purging historical data that's not needed to run a node, the splurge, and lots of other updates in Ethereum for the coming years. So it will be very, very exciting. And I'm very happy that I am Ethereum. I work with Ethereum, so I can cover all of it when it comes to the time.
Awesome. Yeah, it was the meme that Vitalik was saying was like, what's like the merge, the splurge, the purge, and the verge, whatever. The verge, yeah.
He likes the silly names, but okay, it's Vitalik.
So yeah, let him do it. He's earned it. He's earned the right to call it whatever he wants, right?
Yeah.
So, but hey, well, listen, Rony, thank you so much for coming on the show, and it's been super educational. We learned a lot here. I'll include some of the links to some of your research reports in the notes here. And what's the best way for folks to get in touch with you if they have further questions?
Well, you can try the Discord from Mercado Bitcoin. I can send you the link here. We are there all the day. We also do some weekly calls there. So we are 4 in the team, so everyone has like a specialty. I have like smart contracts. We have an NFT guy, DeFi guy. So everybody takes the news from the week, and then we drop it in a 1-hour meeting. So it is very interesting. So you can just join there. I will send you the link right now, and it's very interesting. But you can also ask us anything all the time. We have a channel there. We're always available, and that's it.
Okay, awesome. All right. Well, thanks so much, Rony, and thank you everyone for listening. We'll be back soon with another awesome episode.
Thank you, guys. Bye. Thank you for the invite.